What's up, guys? Welcome back. Today is a follow-up from my last video where I broke down the wheel strategy and talked about exactly what it is inside the playlist of my covered calls and my cash secure puts. People ask me all the time, whether it's in my Discord, they DM me in the comment section, like, what are the stocks that I'm doing the wheel strategy with? Like, how do I choose them? And, why do I choose them and things like that? And if you're new to the channel and you don't know what the wheel strategy is, I will leave a link to that video that I just made last week. Go back and look at that if you're interested in learning about like a simple, foolproof, pretty much no lose way to trade options by using the wheel strategy. In this video, I'm going to talk about the stocks I chose, why I chose them, what my plans are for the future, how many trades I've made with them, the average premium that they've returned, how much I've brought in, and kind of like a big picture. And then I'll jump into Robinhood and show you exactly which ones I actually have going right now as of today and the recording of this video. This should answer all the questions about like why I chose them and like when do I choose my expiration and how do I choose my premiums and my strike prices and things like that. So let's dive into the first stock that I am doing the wheel strategy with. It's the one that I've been doing the wheel with the longest inside this Robinhood portfolio. So the first stock is Wells Fargo. Now, how did I choose Wells Fargo and why? We'll see with all of the stocks inside this video. These are all stocks that I want to hold on for the long term. These are long-term investments for me. For one reason or another, we don't need to talk about why I bought these stocks, but all of these stocks are stocks that I want to hold forever. So that should be something or a criteria that you have when choosing the stocks you're going to do the wheel with. Can you hold on to these long stocks? Because as we see with Wells Fargo, I actually took a loss on my basis from when I first entered my position with them. So to break even with them, I kind of have to hold them for a long term. So by holding on to your stocks long term, you increase the likelihood that you are going to be overall profitable in your situation. I'm also choosing stocks with a pretty low volatility. I talk about how these premiums are passive and people say like I have to do the research and the work. Well, if the stock trades pretty flat like all of the stocks in this video, or at least trade in a way that's pretty predictable, there's not a lot of work that goes into choosing, my strike prices and things like that and performing the wheel strategy. So first, just to give you an idea of what each one of these columns means, just so you can see the first trade I made was June 1st. That's kind of when I started doing the wheel inside this Robinhood portfolio. Then we have the ticker. Then we have what type of trade inside this wheel strategy was it? Was it a cash secure put or was it a covered call? The first thing I did was make a cash secure put, meaning I had the collateral to buy 100 shares. I picked a strike price that I'd be willing to buy those shares, and it was executed. Here was the date of expiration. Here was the amount of premium that I got. It expired worthless, and I was actually assigned those shares. So just like with the wheel, when I get assigned on a cash secure put, I'm going to now do a covered call, which we can see I did that very following week. Covered call, I got myself $53. This is expired worthless. You'll see some of these guys are negative. That's because now, knowing what I know, I close a lot of my options. So when they go zero now, that's pretty much ones that I wasn't profitable. But right now for me, once I get my premium to 75% or so profit, I usually close that out, which means I got to pay some premium back to close it, and then I roll it into the following week. Now, if you're curious like what strike prices I choose for all that, guys, we talk about that inside the options chat, inside my Discord. I'll leave a link down to my Discord. We talk about every single one of these trades as they happen daily, not only from me, but from the 60 or so other people inside that chat. So if you're interested in seeing like daily moves and strike prices and a deeper dive, just, consider that Patreon page. Like I said, I'll leave that link down in the description below and you can jump into that. So with Wells Fargo, since June 1st, I've made 28 trades. The average premium on those was $21.43. The total premium that I've made is $600. And yes, I do have to pay taxes. Premiums are taxed according to your ordinary income tax. So I've pretty much calculated it with last year's tax brackets and figured out that post-tax, I have put in my pocket $468. Now that's incredible because that first cash secure put that I made with Wells Fargo, I think it was like $25 or $25.50. And then it dove. Like as we know, Wells Fargo has taken a dump, right? It is low. But even as it goes lower, I'm still collecting premiums faster than it is going lower. So Wells Fargo is actually a profitable stock for me. And I can exit that position, even though the cost basis is down, I can still exit that position at a plus in the positive because of these covered calls. So it's a great way to, get back some money if you take a pretty big hit or one of your stocks goes on a slide. And frankly, guys, Wells Fargo, because of that low strike price, this was the first stock I chose because it was easiest for me to afford. right? I need the collateral to buy 100 shares. $2,500 was in my range at that time. So that's really why I chose Wells Fargo. I had a bunch of stocks inside my dividend portfolio, but pretty much I knew that I was going to start with the least expensive one. Then I was going to use premiums to build up other things to 100 shares that were slightly more expensive or had a higher share price. And that's essentially what I've been doing, one after another, and I'm on to 4 and I'm almost at 5. So let's take a look at the second stock that I used after I had 100 shares of Wells Fargo and I earned enough premium to build up 100 shares in another stock. So the next stock I did the wheel with, and I'm still doing the wheel with today, is Aflac. And you can see that was almost a month later. So guys, there's so many times I hear like, I got to get all these stocks going in the wheel. One at a time. I did just Wells Fargo for a full month while I built up my shares of Aflac before I added a second position. And we see that I had kind of this and another stock, and you'll see my third stock. I chose this one because of the difference in premiums. We can see that the average premium for Aflac, $41.85, almost double Wells Fargo. Now the reason for that is it has slightly a little bit more volatility. It goes up and down, and we call that IV, that implied volatility. And that IV is going to raise up the premiums. Also with Aflac, I had a really, really low cost basis for Aflac. So where the stock currently was, I had no problem. I could make my covered calls right at the money, and that also increased the amount of premiums I had. Where with Wells Fargo, because I took such a dive, I had to play my covered calls far away from the share price, which lowered my premiums as well. We can see I've made 20 trades. So as compared to Wells Fargo, where I made 28 and I've made $600, for Aflac, I've made 20 trades and I've made $837 post-tax at $652 that I've put in my pocket. So just those two stocks alone since June, July, August, September, October, in 5 months, that's $1,000. So that was an average of just those two stocks, $200 per month, passive, post-tax, in my pocket. So Aflac, I started that last week in June. We could see 1 week later, I started with AT&T, and I was pretty much right at 100 with both of those. And I decided to go to Aflac, like I said, because of those premiums. But right behind it, AT&T, a great dividend payer, something that I'll hold forever. Has a little bit lower premium because it trades so flat, right? Volatility definitely raises premium, but people like want to say, oh, I don't want to trade with that wheel because the premiums are so low. Guys, I wouldn't step over a $1 bill on the street, okay? So even if I'm collecting $1 every single week, it's still something, right? Don't think so much about like, oh, I heard that they're making thousands of dollars on Tesla calls. Well, yeah, that's super volatile. People are going to be losing things. Like I said, I like my nice, comfortable, flat trading stocks, and AT&T really is right there. When we're at $28 share price, about 27, 28, you can get into this wheel for about $2,700. So 23 trades since July 6th, average premium $18.39, total premium $423. Take out some tax and we get $329. And like I said, $329 is awesome. At $28 a share, think about how many free shares of AT&T doing the wheel has gotten me. The most recent ones, the newest one to the bunch, guys, is Pfizer. I started them in mid-August, as we can see. A lot of cash secure puts. I pretty much got to choose the price that I was willing to buy 100 shares. And until that happened, I wasn't going to raise my basis. And as you can see, I pretty much went over a month of not buying any shares of this. Stick to your guns, guys. Be disciplined. I sold puts every single week. I knew the share price that I wanted to buy at, and I was not willing to get greedy or change my basis at all. And eventually, it dove down and it hit the cash secure put strike that I wanted, and now I've just been selling covered calls at the same. And because I was so patient, I can now make my covered calls at a spot where there's a very, very good chance that they are going to expire worthless. So this is my least frequent one. I only have 10 trades, so about half the other ones. Average premium, $25. So you can see, with the exception of Aflac, I'm right there at pretty much $25 every week. I'm pretty much at 10 days because I often close and roll to the next week. So think about a 2-week cycle. I'm making about $25 every trade. I make 2 of them every 2 weeks. So about $50 every 2 weeks that I'm making. The total premium on this, $253. Total taxed, after I take the taxes out, I'm getting $197. So let's look at the total amount of money now that I've made post-tax from all of these since June 1st. Guys, since June 1st, I've brought in $1,648, guys. And this is on pretty much a $10,000 to $12,000 portfolio. So a 10% return since June, guys. I'll just take that. And like I said, there's so many people that want to criticize it. I'm not one of those people that's going to criticize it. I went into this with an open mind. I add one pretty much every month, and that's what I'm going to continue to do. And it kind of snowballs. In the beginning with Wells Fargo, I only had one stock that was generating premium. So it took me a little bit of time to build up and build up to Aflac. But then I had two. So I got AT&T quicker, and then five. Like, now I have 5 things that are generating income. I'm making almost $700 to $1,000 every single month. And then there's going to be another wheel stock right after this one. I'm going to continue to go on and on and on. If you're curious what that next stock is and which one I'm building for the wheel, like I said, check out the Discord, or wait, I will definitely make a video when I get to a 5th stock. Let's look right now inside Robinhood and see exactly what I have live right now and show you the different trades that I have open right now. So here they are, guys. Here's all the stocks that I own: Aflac, Wells Fargo, T, and Pfizer. So you can see I have 100 shares of those. I only, as we saw in a video a couple weeks ago, I left Robinhood with all my other dividend portfolio and moved it over to Vanguard. So right now I'm just trading options inside Robinhood because of its ease and because it's free. There's no commissions on it. So we can see on all of these stocks, I have all my covered calls. Here's a call, here's a call, here's a call, here's a call. We can also see that I have a long put. This expiration is 12/18. Right now, we're right in the beginning of November. So about 6 to 8 weeks out, I made this trade because I saw Wells Fargo going down and down and down. And at my current basis, I knew that if it got to 20, I would take the premium. I got a pretty nice premium. What was the premium I got for this? I got $54 for this trade. So inside that, I got $54. And it's kind of like, all right, if it hits, I'll take it for $20 because it's definitely going to rebound up. Like, even if the government has to help them up, Wells Fargo's not going out of business. They're not going to go to zero. They might still dive, but they'll be above $20 again someday. So I figure if it gets to 20, I'd be happy buying 100 shares. And that money is actually, that $2,000 is all the premiums building up. Now, if I get enough money to get to 100 shares on my next one, then I'll close that put. I'll no longer do that put, and I'll apply that $2,000 plus the additional premiums onto my next wheel stock. I'll leave that wheel playlist here of everything, guys, that I've done since the beginning, about 10 videos or so. I hope this video helped. If it did, give it thumbs up so the YouTube algorithm will push it out to more people that are starting to learn how to do the wheel strategy and pick stocks for the wheel. And until I see you guys on the next one, stay positive, work really, really hard. Always be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.